Welcome to The Explainer. So today we're going to tackle a huge question. What actually makes a nation truly developed? We hear about GDP and economic growth all the time, but do those numbers really tell the whole story? Let's dig in and explore a much more human way of looking at progress.
All right, so here's how we're going to break this down. First, we're going to challenge that old idea that wealth is the same as well-being. Then, we'll get into the real engine of a nation's growth. After that, we'll see how you actually measure this stuff. Look at some of the challenges India's facing, and then we'll wrap it all up with a big picture idea for our future.
So let's kick things off with a little bit of a puzzle. We're going to look at a classic situation where the numbers on paper tell one story, but what's happening in people's lives, well, that tells a completely different one.
It's an assumption we all kind of make, right? The richest places must be the best places to live. I mean, it seems logical. More money should mean fewer problems, but is that really how it works? Let's put that idea to the test with some real data. Okay, so take a look at this income data. If we're only looking at per capita income, which is basically the average income per person, Haryana is the clear frontrunner here. It's way ahead of Kerala, and both of them are miles ahead of Bihar. So if money is our only yardstick, Haryana wins. Case closed, right?
Well, hold on. Let's switch gears. Instead of money, let's look at something that really tells you about public health, the infant mortality rate. And what happens? The whole story flips on its head. Kerala, the state with the lower income, has an incredibly low rate, just 7 deaths per 1,000. Now compare that to Haryana, where the rate is over 4 times higher. All of a sudden, our winner doesn't look so clear anymore.
And this gets to a really critical point. Your personal paycheck, as important as it is, can't buy you everything. It can't buy you clean air to breathe, and it can't guarantee that there's a good public health system in place. These things are collective goods, and they are absolutely essential for high quality of life.
So, if it's not all about the money, then what is it about? This brings us to a much more powerful idea of what creates a nation's wealth. It's not about what a country has, it's about who its people are.
This is the core idea of human development, and honestly, it's a total game changer. It says the whole point of a country isn't just to grow the economy. The point is to grow its people, to expand their freedoms, their opportunities, their well-being. The economy, that's just a tool to help get us there.
And the engine that powers all of this is what economists call human capital. Now, this isn't a factory or a machine. It's the combined knowledge, skills, and health of an entire population. You could say it's the ultimate renewable resource.
And this comparison just lays it out perfectly. Think about physical capital, like a big machine in a factory. It wears out, it gets old, and its profits mostly go to one owner. But human capital? That's completely different. A doctor's skill doesn't just benefit the doctor. It heals the entire community. A scientist's discovery doesn't just benefit the scientist. It can create breakthroughs for literally everyone. It creates these amazing ripples of positive change.
And what this really means is that when we talk about spending money on education or on healthcare, we're not talking about a cost. We're talking about an investment. And it's probably the single most important investment any country can ever make in its own future.
And the results of that investment, they're very real. A healthy, educated population is just flat out more productive. They're the ones who come up with new ideas, start new businesses, and find new solutions. They can learn and adapt to new technologies super quickly, which is absolutely critical in the world we live in today. And all of that directly fuels a stronger economy for everyone.
Okay, so if we're not supposed to just use income to see all a country's doing, how do we do it? How do we actually measure things like health and knowledge in a way that lets us compare different countries fairly?
Well, the answer is the Human Development Index, or the HDI. It was developed by the United Nations for this exact reason. It's an incredible tool that gives us a much richer, more complete picture of a country's progress by focusing on people, not just on money.
The real beauty of the HDI is just how simple and elegant it is. It boils everything down to 3 basic questions. First, are people living long, healthy lives? That's measured by life expectancy. Second, do people have access to knowledge? That's measured by how many years of schooling they get. And third, do they have a decent standard of living? That's measured by gross national income. So see, income is still in there, but it's just one part of a much bigger, more meaningful picture.
This table from 2018 really brings the whole concept to life. You can see right here how India stacked up against its neighbors. Take a look at Sri Lanka, for instance, ranked much higher. And you have to ask, why? Well, look at its stronger numbers in life expectancy and education. That's exactly what the HDI is designed to do. It shines a light on where the real gaps are and where the biggest opportunities for improvement lie.
So with that idea in mind, let's zoom in a little bit on India. The source material for this explainer highlights a couple of really key challenges in building that human capital we've been talking about. This is where the big, ambitious policy goals meet the tough, on-the-ground reality.
For a long time now, a key national goal in India has been to invest 6% of its GDP into education. But the reality is, spending has pretty consistently fallen short of that target. Back in 2014, for instance, it was just over 4%. Now, that gap isn't just a number on a chart. It represents a massive missed opportunity to build the nation's human capital.
And here is a pretty sobering statistic that shows the problem goes even deeper than just spending. Even when women in rural areas manage to get an education, a degree, it doesn't always translate into a real opportunity. A 30% unemployment rate for this group points to a serious disconnect between the education system and the actual needs of the job market.
So the crucial point here is that the challenge is really twofold. It's not just about providing access to education, it's about making sure that education leads to real empowerment and economic independence. And this is especially true for women, where the return on investment for society and the economy is just unbelievably high.
So let's bring this all home with the single most important idea to take away from our entire discussion today. It's a thought that completely reframes how we should think about development.
At the end of the day, sustainable development isn't just about economic charts or 5-year plans. It's about stewardship. It's about understanding that the true measure of our success is the world and the opportunities that we leave behind for the generations that come after us. It forces us to ask a tough question. Are the choices we're making today truly making their future richer?